Welcome back to Stock Market Weekly, episode 729. I am your host, Evan Medeiros. This is the show where we break down all of the important, noteworthy moves across financial markets, looking through the lens of technical analysis. Glad to have you here. Let's get into the headlines this week. Front and center is this recovery in the stock market. It was nice to see sort of this bleeding, this pullback to stop this week. And it really seems like earnings were the catalyst for it. So we had favorable, very favorable earnings reactions out of Tesla, out of Google, out of Microsoft. Those are some of the largest companies, right? Part of the Mag 7, which really gave the market some strength, perhaps, to find their footing and at least work off some of this oversold sort of conditions that we found ourselves in coming into this week. Not sure if the coast is clear yet. We're going to, of course, spend some time looking at the bull and bear evidence throughout this episode, but it's at least a start for the market to try and find its footings. We did have a big week overseas in the Chinese market. So a lot of the Chinese companies were seeing some big moves this week and really sort of shining the light on a potential bottoming formation occurring in those stocks. We're going to take a look at some of them in this video. Meanwhile, on the bearish side, we still have Treasury yields that are inching. They're grinding higher. This trade all kind of fits into one. Yields rising, dollar continues to move up, and oil continues to move up, right? And this inflation trade is putting a little bit of a damper on the mood, but the VIX, if we look at volatility, it is coming out quickly, right? And it was an earnings week, so there's lots of events and sort of emotions sort of riding on this week. So we saw the VIX did come down. So lots of cross currents right now. Great time to take a moment and look through this evidence. Stick around. We got lots to talk about in today's video. All right, let's dive into some charts here. TC2000, that is the charting platform we are using. This is a platform that we support here at the Trade Risk. If you want to work with me on a custom scan, indicator, layout, if you're trying to do something cool, different, or something you just don't know how to do for this platform, I work with traders every day on TC2000, so check out our website. Got lots of cool downloads as well for the platform, so check it out at thetraderisk.com. Now, let's get into the numbers here. Very positive. If you follow my mouse, 1 week returns, you can see green across the board. Dow Jones was the laggard, and the NASDAQ 100 was certainly the bright spot, up 4%. Dow Jones up 0.66%. Everything else kind of falling in line here. Take a look at volatility though this week, down about 3 to 4 points here in the S&P. If you're looking at the VIX, we've got the NASDAQ VIX here as well, and we've got the Dow Jones now printed as well. And you can see just lots of anxiety coming out of this market. And again, we had some big earnings, we had some inflation data coming out, so there was lots for the market to perhaps hedge against. And now that we have a lot of those events behind us, it is sort of natural here that we see volatility come down. It also helps that all of those reactions, for the most part, were positive. So that certainly helps keep those numbers low. But VIX is now back down to 15, right? Just last week, or that last handful of days, we were looking at north of 20 VIX, looking for a kind of meltdown in this market and how quickly the pendulum has swung. So if we take a look here at the sectors, everything was in the green this week. So if we sort from top to lowest, from strongest to the weakest, we've got tech back at the top. That makes sense. NASDAQ, consumer discretionary at the top of the list, and industrials. It's a pretty powerful kind of trifecta there in terms of leadership groups. On the downside, we saw materials, we saw healthcare, and we saw communication services, all still green, almost up 0.5% or 1%. But lagging on a relative basis. Again, you can see also in the middle column here is the 1 month return. So you can see again, showing the landscape here that we've been in this sort of broader pullback mode, retracement in markets, and we saw a nice kind of recovery rally this week. So if we take a look here at our smart trend filters, custom indicator we have built for TC2000 and TradingView. Really isn't a whole lot of change happening this week. There's lots of turbulence underneath the hood. We spent time talking about that the last couple of weeks. We're finally starting to see these daily trends roll over, break down, and start to just become a little more vulnerable. And we're kind of in that same phase right now. Things are still just kind of choppy. They're messy. We've got good, we've got some bullish evidence. We've got some bearish evidence, and there's some, things to think about on both sides of the fence right now, and really seeing that reflected in the mixed sort of outlook here from our trend filters across sectors. Now, let's take a look at market breadth under the hood. We always like to spend some time looking at 52-week highs, 52-week lows. We think it's so important to sort of get a good objective under the hood view of markets. And you can see here that we really don't have a whole lot of activity going on right now. We're in fact seeing on the highs and the lows a very muted sort of dull number here. We're not getting a flurry of activity of stocks hitting highs. We're not seeing the flurry of activity of stocks hitting new lows. We're kind of in this wait and see mode. We're just kind of at balance here, waiting for a little more structural evidence under the hood for one of these, ratios to start to win out and win the tug of war, if you will. So right now, we're coming off a very good kind of, bullish kind of breadth thrust underneath the hood from November of last year to April, to the start of April of this year. We had a nice, 5-month stretch of exceedingly, a number of stocks hitting 52-week highs, exceeding the stocks hitting 52-week lows. We saw a nice melt up in the market, and now we're in this cool off phase. So we're going to continue to monitor this. There's really not a whole lot of new evidence here this week. It's mostly still just a dry spell and, kind of a low period for this indicator. Now, if we take a look here at IBD, so Investors Business Daily, shout out to them. They are a sponsor of the show. They help make this show possible. We've got links in the description of this video so you can sign up for their digital subscription. It's pretty inexpensive, but it gets you access to their curated stock lists with a lot of other things kind of happening. Beautiful week here across their IBD 50 stocks, everything green here, some good winners, good general gainers here that they curate on a daily basis. So check it out with a link in the description of this video. Now, if we move on to commodities here, you can see oil was at the top of the list, up almost 2% this week. Stumbled a little bit, I believe, to start the week. We'll look at that chart in a little bit, but sort of got its act together. Copper up nicely. Everything else was kind of flat to down. So we saw the dollar index basically flat this week. We saw Bitcoin down just a little bit. We saw ag down. We saw gold down. We saw natural gas, silver, all down this week. So just getting a little bit of, some of that sentiment, some of that froth. Commodities have been extremely strong over the past month or so, generally speaking. And so now we're starting to see a little bit of retracement, profit taking, kind of pulling back this week. Now, yields not so favorable here. So we continue to see higher highs kind of happening here, new kind of cycle highs over, if you're looking at cycle over the past 6 months or so. We got 5-year, 10-year Treasury yields, 30-year, all kind of inching up towards highs. They didn't close the week at highs, but certainly continues to be kind of a thorn right now in the markets. This is what we are grappling with right now, is this inflation, this sticky inflation, when the Fed might start to cut, when if at all this year, right? Coming into the year, of course, everybody knows we had 5-6 rate cuts planned. Now it's, down to 2 maybe. So where we end up falling here and seeing where the market kind of prices it in, or kind of is doing the Fed's work at this point, with Treasury yields continuing to rise up. So that's all the data. Let's take a look at some charts now. S&P 500, this is a weekly chart. Now, a couple of things to note here on the week. First is, the inside week, right? So this is a technical term. Technicians love to use it, but it basically just means that this week's of trading, this 5 days worth of trading we just saw, was encapsulated entirely within last week's trading range. So that means we traded below last week's highs, above last week's lows. And what that sets up is kind of this wait and see mode, right? Is this a trend reversal? And can we start to, continue to build on the lows that we made on Friday of last week, or is this going to be some type of bear flag that has more pain to come in the month of May, right? That's what we're going to be looking for here. Generally speaking here, 2.67%, heavier volume coming out. Let's go to a daily chart to look at this week's action. We started the week right on Monday with an up day, and we really followed through nicely. Tuesday and Wednesday. Thursday was the only stumbling block, but we came back strong. Earnings were good, and off to the races we went Thursday and into Friday. So S&P 500, when we look here at the daily chart, we basically just went through a 6% correction, let's call it, just shy of 6%, from the highs that we made at the start of April to the lows that we made last Friday. We saw a 6% correction, the largest correction that we've seen in the S&P 500 since November. And if you recall, November timeframe, the market was in kind of a pretty difficult spot, because previous to that, we had topped in July of 2023, and we were going through, you know, a 11% and a much longer kind of protracted downtrend that the market was in. So the fact that we finally got a pullback, we finally got a shakeup here after such a strong move up, I think is wonderfully constructive in this market, right? And I think, again, time frame is going to just be so dependent here on how excited you are about this market. Now, for instance, we run a couple of automated trading systems. They're price action based, they're swing trading systems. Our short-term trading system is pretty much all cash right now, or 80% cash. It's not so interested on the long side of this market. Actually, I think it's got, it actually might be entirely perfectly hedged right now with shorts and longs. So it's not taking a bold position on the long side right now. There's too much turbulence, too much volatility. The market's kind of corrected enough and broken downtrends. In the short term, it does not really want to be heavily exposed. However, our longer term systems, our longer term swing trading systems that are looking out 1 to 3 months or even 4 months and longer, they still have a good footing in this market, 80% in you know, invested here, and would potentially add to that. So time frame matters, and this correction here, you know, depending on your time frame, is going to be a little more severe or a little more meaningful to you. So I think when we look at big levels now, of course, we have Friday's lows right around this 4,900 or so, 4,958. That's approximately this consolidation that took place here in February of this year. And then, like we talked about briefly in last week's video, the old 2022 highs here for the all the indices, right? So if we look at the S&P 500, the old former all-time highs that we broke out of at the beginning of this year, that comes all the way down here around 4,800. And I think that's a big critical kind of longer term structural level. So that puts us, you know, as of today's closing price, we're about 5.5% above that area. Not saying we have to go back down there, but of course, that would be a retest area. That would be about a 9-10% correction in the S&P 500 from peak to trough. And if we came back down here, you could still make a pretty good case that this market is in a structural uptrend, a bull market on a longer scale. If we came all the way back down to around that 4,800 zone, and especially if we held, bounced, found support, and then saw sort of an end of year rally, let's call it, right? Like that would still be a very good positive longer term outlook, right? So let's keep an open mind. For now, bulls have arrived. Earnings seem to have saved us. We're not out of the woods yet. The S&P 500 now is basically 2.95, just call it 3% from the lows on Friday. We're about 3% from the prior all-time highs. So that puts us in a very difficult spot short term, because we're kind of wedged now from the low to the high, equidistant, and we still have earnings coming out next week. We've got Apple, we've got some other Mag 7 stocks, and we've got lots of other companies that are still set to report. So let's keep an open mind here. I think it's a pretty difficult spot short term for the market right now. I think this could lead to lots of chop and some frustration. So let's keep that in mind here moving into next week. NASDAQ 100, okay, go to that weekly chart first. Again, an inside week from a technical perspective. The NASDAQ 100 was down almost 5.5% last week. We did come back strong, up almost 4%, but still you can see we barely, did the full recovery of some of that damage that we saw. The NASDAQ 100 had that wonderful setup that we talked about for some time, which was that orderly sideways, consolidation. And we got that picture perfect kind of breakdown last week. We filled the gap that was open from earlier in the year, and now we're kind of springing up. So again, if we look back in hindsight and the low was last Friday and this market just goes off to the races here and sellers can't find more follow through, it's going to be extraordinarily bullish, but I still think it's too early to sort of declare victory here. We are kind of smack in the middle of the range. We're kind of coming right back to a retest of this breakdown zone. So this is critical going into next week, I would say. We have some earnings later in the week like Apple, which is just going to weigh so heavily on what the NASDAQ 100 is going to do. But, this 433 zone is a good line in the sand here. If the NASDAQ's starting to close back over this and it can get its head back up into the old range, that would be, objectively a very good thing for the market. But just don't forget, you've got a big catalyst on Thursday that could really swing this with a big overnight gap in one direction or the other. So for now, I think you got to be a little bit cautious here. It's kind of a sticky spot for the Qs. It's a little aggressive trying to buy now to, in a short-term trade, let's call it, but longer term, things are a little bit different. So Qs, 433, let's pay attention to it. Let's pay attention to last Friday's lows. And just like we talked about, the old 2021 highs, which is around 403, kind of just under Friday's lows. We almost got there, but we fell shy by about 0.5% or so. So that's kind of the roadmap here. Sticky situation. That's the way I'm looking at it. Russell 2000, let's round this out. Inside week. Again, this is kind of the roadmap we've been looking at here. And we've been saying, between 190 and 210, this feels like a level, or it feels like an area that this wants to spend some time collecting its footings and seeing how the market's going to accumulate in this range or lack thereof. And so far, I think you just got to be patient here in the Russell 2000. Bigger picture here, nothing has changed. We're still in this range. I think you just need more time. It's messy. And again, I don't see too much edge in the short term, one way or the other. Okay. So that's the read there on the markets. Let's take a look at the VIX real quick because we touched on it at the top of the show. I mean, this is sinking like a rock. I mean, we were briefly up above 20, and now we're suddenly 6 points off of those highs made 6 days ago, back down to 15. So going to be curious to see where the VIX is here. Again, it is sinking pretty quick. We've got lots of earnings. So, I wouldn't even be surprised if we saw this, get a little more jumpy to the upside again before earnings. But a sweet spot here for VIX, around 16 or sub 16. That's great. I mean, I think that would actually be a little optimistic here if the VIX just hangs out between, 14.5 and 16 or so. That would be a good sweet spot for the market. So let's keep an eye on it, but that's certainly notable there. And gold, I wanted to hit on. You could see gold was down 2% this week. It did rally off of its lows. I mean, this is still in a pretty good, structural kind of uptrend here. I do like gold. I have position in gold. I don't necessarily see the end of gold here. I think the gap down on Monday took some momentum out of the sales here, and we could easily see another kind of ABC or another leg down, even to the 205 to mid 200s, let's call it, upper mid 200s. And still be in that longer term uptrend. Just like we said, time frame matters, right? So it just depends on your time frame here. But GLD I still like, even though some of that momentum came out. Last but not least, oil, again, you could see opened up the week kind of weak, and then it just found a bid all week. This was going into almost 3 weeks of corrective action, and now you can see it starting to rebound up here. So oil, this is tied to that inflation trade, right? Oil dollar rates probably all going to go hand in hand right now, highly correlated. So let's, keep an eye on it. But for now, oil continues to work here. No position. Don't really have any strong conviction on that. So that's, I think, everything I wanted on major markets. Let's touch on the Chinese markets because I think this is notable and not many people are talking about it. Take a look at KWEB right here. This is a weekly chart of the Chinese kind of internet ETF. First off, I mean, just look how long it's been consolidating sideways here since the start of 2022. So you get this very long base. Take a look at the weekly bar here today or this week, up almost 13%, heavy volume coming in. You can also look at FXI. which has a different structure here, but it was still up 7.7%. And you can look at the individual names like something like an Alibaba. This is all weekly charts we're looking at. Alibaba was up almost 10%. You could look at, what is it, Tencent. I always forget the ticker. Here we go. Tencent here up 14% this week. So you're getting some potential. I mean, this looks like a potential bottom formation here that you're finally starting to break out of a nice downtrend and starting to enter that stage one accumulation. Again, I don't see too many people talking about it. Lots of people gun shy on China. I don't personally even have a lot of exposure here myself at all. So I guess I'm not, acting on this per se, but this looks like it is moving in the right direction here. You could look at JD, could look at Baidu, right? Baidu's not as strong, but lots of these stocks, some places to do some homework this week for everyone. So that I think covers, let's see, China. I did actually work on one new layout here to show. So this is I was just kind of toying around with this new layout, which I have some more work to do. This is a large cap layout. So this is essentially looking at the biggest companies, the largest companies in the stock market. And I'm just kind of pulling out 10% or higher moves, right? So I just want to see large cap stocks, what moved out of the large cap stocks, what moved up big or moved down big. There were no stocks. So this watch list down here, this red one on the bottom left that you see moving, this are stocks that are down 10% or more. There's none. So again, kind of speaks to the volume this week or the sentiment this week. But there were 14 stocks that were up 10% or more this week. And let's take a quick tour through it. I think we'll end the show here. So NVIDIA was down 13.5% last week, and it came back up 15% this week, right? So just a total slingshot in the opposite direction. NVIDIA had been pulling back for 4 or 5 weeks or so, and it actually had a 21% correction. So time flies, right? These pullbacks happen quick, but 21% correction if you're waiting for a dip in NVIDIA. Again, time frame matters, horizon matters, but you got a 20% pullback, and then boom, we saw buyers come in pretty quickly here. So that was interesting. We saw MCHP, Microchip Technology, also had a huge week, up 14.5%. Tesla up 14.4% this week. They were one of the stocks that reported earnings. Take a look at Tesla here. Look at this middle column. Tesla's still in a 42% drawdown from its 52-week highs. It was up 14% this week, and it's still in a 42% drawdown. So again, back to time frame matters. You might think, wow, I'm really late if I buy Tesla here, but when you really zoom out your time frame, you still have a lot of room up to get back up towards those prior highs. I'm not saying Tesla's going back up there. I don't have a position in Tesla, but I'm just saying, again, perspective matters here. Good volume. We'll see if it can stick. CARR, again, building materials, a little bit diverse here, up 13%. Nice actionable kind of breakout, heavy volume coming out of a nice orderly base. It's actually a pretty interesting setup right here for this particular company. NXPI, another semiconductor, KLAC, another semiconductor, MRVL. So lots to think about there for semiconductors that were moving. Good old Coinbase, also up 12% inside week. Google reported earnings, blew them away, and announced a dividend. All-time highs. Everybody wrote Google off at the start of this AI trade, and here it is, swinging that pendulum to the other side of the boat, and now everybody's rushing for Google as it pushes up towards all-time highs. Congrats to the buyers there. Broadcom, another semiconductor. Google again. Texas Instruments, another semiconductor, up 10% this week. Good old Chipotle, bucking the restaurant trend, up 11%, all-time highs. And finally, ADI, another semiconductor there. So that is a great spot to leave it. Hopefully this video was helpful. Thanks as always for tuning in. We got lots of links in the description of the show. If you're a TC2000 user, check out what we have on this platform. If you want to check out our trading systems, we've got links there, and our sponsor IBD also in the show. So thank you so much. We'll see you back here next Friday. Take care. Have a great weekend, and we'll see you next time.